Hi, welcome to Kneppy Invest. Time to do a Dusk update. This is a company I've actually owned in the past on a technical breakout that coincided with a positive announcement, which was a profit or revenue upgrade in December 2021. Then the share price went on a serious run over the next I think it was about 6 to 8 months. And then that trend or upward trend in the share price came to completion in August last year, and the share price has been struggling a little bit. The company has released some trading updates. I'll talk about those. They've also announced an acquisition in the past week. I'll briefly touch upon that acquisition. So before we discuss these updates and the financial data for Dusk, just a few facts in regards to this company. Dusk is a home fragrance retail company. They sell stuff like candles, diffusers, oils, and fragrance-related homewares. And to be honest with you, I have never gone into a Dusk store, and more than likely I will never go into the Dusk store because I'm not the market this company is aiming towards, because I never buy the sort of products this company sells, and more than likely will never buy unless it's a present. Now, in saying all that, Dusk has experienced some pretty significant tailwinds during the COVID-19 period because of lockdowns and because of working from home. So a lot of these people who are in lockdown and working from home more often want their home to be smelling nice and pretty. So they've been buying candles and diffusers and oils and fragrance-related homewares. So Dusk has performed financially quite well over the last 2 years, but the market does not expect those tailwinds to continue in the future, and we'll have a look at some of the valuation metrics. And this company does look quite attractive, but be warned, those tailwinds to make those valuation metrics look attractive may have come to an end already. Dusk was founded in 1999, but was acquired by Brazen Limited in 2004. And then Brazen sold a majority of the company to Catalyst, which is an Australian private equity firm, in 2010. Thus listed on the ASX on the 2nd of November 2020. So they've only been on the ASX for about 14 to 15 months. The CEO is Peter King. He has a 3.5% holding. I don't think he's a founder, but he's been in this role, or he's been with the company for quite a while, and he does have quite a good reputation because he's done, with Catalyst's help, he's done a lot of good things moving this company forward. The major shareholder of Dusk remains Catalyst, that Aussie private equity firm that did or bought a majority stake of the company in 2010. They still have a 15.7% holding. And Wilson Asset Management have a 3.8% stake in Dusk. It's good to see that highly reputable fund manager having such a nice stake in this company, which does give you a little bit more confidence that this company has something going for it. Anyway, Dusk has a market cap of $189 million. That's at a share price of $3. So not too high, particularly when you look at some of the financial numbers. And the ticker code for Dusk is DSK. So let's have a look at some of these financial numbers, which I've already mentioned. The valuation metrics look very attractive right now. Revenue increased almost 50% from financial year 20 to 21, increasing from 101 million to 149 million. Again, lots of tailwinds behind this company. Now, Dusk traditionally has fairly high margins because they sell their own products. I think that's why they have high margins. And in financial year 21, their gross margins were 68%, which is fairly high for a retail company. I think I could be a little bit wrong with that, but I believe Dusk has significantly higher margins than most retail companies. Operational cash flow, $35.1 million, which does seem quite high for a company with a market cap of 189, but they did spend $14.2 million of leases. Now, there were some accounting changes a few years ago, and what I like to do is take leases away from the operating cash flow, because leases is a real thing, or real payment, like an ongoing day-to-day payment for Dusk, because they have to lease out stores. So if we take away the leases, operating cash flow is around $21 million, which is very similar to the profit of the company. In the financial year 21, the profit of Dusk was 21.9 million, which was a significant increase from financial year 20, where it was 9.5. So more than doubling in profit over the past year. They have $21 million of net cash, which means the enterprise value is about $168 million. Now to the valuation metrics. So most of us know about P ratio, and the P ratio for Dusk is 8.6. That does seem quite low, and the reason it does seem low, you might call it a value trap, is the market knows that the tailwinds behind this company have come to an end. So they don't expect really good financial numbers over the next few years. So there is a bit of a discount right now to Dusk shares. Another valuation metric I love is the EV, enterprise value to operating cash flow. And if we don't include lease in operating cash flow, we get a number of 4.8. But if we do include the lease in operating cash flow, we get a number of 8. Fairly big difference between the two. Typically, I look for anything less than 6 is potentially good value. Anything between 6 and 10, I'd say, is fairly value. Now, this is always company dependent, so you can't just look at a EV to operating cash flow ratio or any sort of valuation ratio and take that number and determine whether a company is good value or expensive. You have to look at each individual company and particularly look at the growth of revenue and operating cash flow and profit for those companies. One thing I always do is look at the statement of cash flows when a company releases their half-yearly or yearly results, and this is Dusk's statement of cash flows from the yearly report that they released in August of 2021. Now, the reason I look at a cash flow or statement of cash flows first before I go to the balance sheet or the profit and loss statement is because cash flows is least likely to be manipulated by the accountants or by fraudsters. Now, it doesn't mean it can't be manipulated, but it's least likely because cash flows is a real thing. But in saying that, there has been companies caught in the past that have manipulated their cash flow. Have a look at Biggin. Their ticker code was BIG, and they manipulated their cash flows like there was nothing else. Made it look like they were bringing in boatloads of cash, but they were not. So even though I did say that, doesn't mean cash flow statements or cash flows cannot be manipulated by bad, nefarious people. Anyway, what I'm doing is looking for anything out of the ordinary here. And the main thing I'm looking for is cash flows from investing activities and financing activities and comparing that to operating activities. There is one slight red flag I do see for Dusk, and that is the dividends paid to their shareholders, which amounted to $19 million. And I'll talk about why that is a slight red flag for me. So when you look at the cash flows from operating activities, $35.1 million. And I like to take away from that number the lease liabilities because that is a real cost for a company, which amounted to $14.2 million. So if you do take away lease liabilities from operating cash flow, you come back with about $21 million of real cash flow, I like to say. And then if you take away capital expenditure, which is the purchase of property, plant, and equipment, and for Dusk that was $3.7 million. That means you're getting down to about $18 million of free cash flow. However, the dividends paid was higher than the free cash flow, which was $19 million. They also spent $4.9 million on the cash buyback of options. Now, because the dividends paid was more than the free cash flow, and because they did buy back some options, the overall cash in this company fell by $7 million. Now, in my opinion, one of the most important jobs of management of companies is capital allocation. And they have the capital allocation is just management deciding what to do with the cash flow that the company does get from the operations. And for some reason, management of Dusk decided to give a lot of that money back they generated in cash flow in operations back to the shareholders. And I do think that dividend was a little bit too high. I would have liked that dividend to be at least half what it was here. And the reason I want that dividend to be lower is so they can increase their cash on hand for potential acquisitions, for potential growth in regards to stores they have or want in the future. So In my opinion, capital allocation is one of the most important things management have to decide, and that is one red flag I do have about Dusk management. Dusk have released 2 trading updates over the past 4 to 5 months, and both of these trading updates coincided with a major event on the company's calendar. For instance, the first trading update was released with their full year results on the 27th of August, and the second update was released on the 11th of November, which coincided with the company's AGM. Now, the things I'm looking for here are total sales and how they compare to previous corresponding period, and like-for-like sales. And in the first update on the 27th of August, total sales were down 28% versus previous corresponding period, and like-for-like sales were down 11%. So not good news in terms of trading over the first 7 weeks of financial year 22. And then in the updated trading update on the 11th of November, total sales were down 23% and like-for-like sales were down 9%. So more than likely, after the first 4 or 5 months of financial year 22, those numbers we saw, financial numbers we saw for financial year 21 won't be similar in financial year 22. We will see worse numbers, and that's why the valuation metrics do look quite attractive. The P ratio of 8 does look really low, and this is the reason why, because the financial year 22 numbers we'll see for Dusk more than likely will be lower or worse than we saw in financial year 21. Dusk recently did make an acquisition on the 17th of December. They acquired 100% of Aroma Group, Australia's leading supplier of candle making inputs. So sort of does fit in with the Dusk business model. The valuation of Aroma equates to EV, financial year 21 EBIT multiple of 5 times, and a lower multiple of financial year 22 forecast EBIT. The acquisition is expected to deliver pro forma EPS accretion from year 1 of over 20% before synergies. And most acquisitions, when they're made, that sort of thing is mentioned. But the majority of acquisitions companies make are not successful. However, the market initially loved this acquisition. Share price increased by about 10% on the day they released this news. So I just want to touch upon this acquisition, but I was actually looking at how the market reacted to this. And even though the share price did increase on the day, the share price has pulled back subsequently from the 17th of December. I'm going to look at 2 charts here for Dusk, both daily charts, just subtle differences between the 2. For instance, in this chart, I've just deleted the moving averages, and all I have is an uptrend from December last year to June this year. And I bought this company when they released a trading update in December 2020. The share price increased something like 18% on that day. The share price kept on increasing. I bought at $1 and about 96 cents, if I remember correctly. And the company remained, or the share price remained in an uptrend from the time they released that trading update in December all the way to June of last year, when the share price was about $3.60. So the share price almost doubled during that uptrend period. But that uptrend was broken at the start of June this year, just before they released all that financial news, all that trading updates. Share price did increase a little bit from there, but we have seen the share price move lower since then. So because of these trading updates, because of the expectations of worse financial year 22 numbers, that's why the share price has been struggling over the past 6 to 8 months. In this version of the previous chart, I've just deleted the trend line and I've just included the 3 moving averages in this chart, the 25, 50 and 100-day moving average. And what I'm looking for here is shifts in sentiment. And shifts in sentiment can happen quite quickly. And for Dusk, it happened between about July and August last year, because the share price was increasing up until the end of July. We saw the share price high for this company reached at that point in time at about $4.05. And then over about a 2-month period, the share price fell from $4.05 to a low of $2.90. And it was around that time, I think the market it came to the realization that the really good financial results this company experienced in financial year 21 had come to an end. And then the company actually confirmed those fears from the market when they released that trading update towards the end of August on the financial year 21 news. And the share price of Dusk now is in a downtrend. And the reason I'm saying it is in a downtrend is because we are seeing successive lower lows and lower highs. But also, when you look at the 3 moving averages, the longer term moving average, which is the purple one, is on the top. You can see when the share price was increasing back in early 2020, the longer term moving average was well below the share price in the other 2 moving averages. Now, the longer term moving average is above the other 2 moving averages. And that's telling me the share price right now for Dusk is in a downtrend. The other thing to note here is when they announced the acquisition on December 17th, the market initially liked it. Share price did increase. And for a short period of time, about 2 weeks, the share price actually moved above the 100-day moving average. So that was a potential breakout in the company's share price. But that potential breakout has failed because the share price has turned lower over the last 5 trading days. In fact, it's fallen from about $3.25 to a current share price of $3. That's all I have for this January 2022 update for Dusk. This company does look cheap based off those valuation metrics, but we should expect not as good financial numbers for 2022 than what we saw in 2021. But doesn't mean there's no future for this company. That could be just a little bump on the road to success. So for those who are in it for the long term, this company does look interesting to me. But I have traded this company in the past. I bought it when it broke out on a good trading update, then sold it when it broke through the upward sloping trend line. If you have any questions about Dusk or any other company on the ASX, leave your comments, your thoughts, your questions in the comment section of this video. I am starting to lose my voice, so I'm going to have to finish this video fairly quickly. Now, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.